It's Giuseppe with the My Denver Home Loan team. In today's video, I wanted to touch on the borrower's dilemma, especially when it comes to locking in an interest rate. And that is that mortgage advertising can be extremely deceptive. Sometimes it's actually designed to be that way in the industry where, in essence, most banks, if you're looking at an apples to apples comparison on fees, are going to have the same exact interest rate. What changes are the fees that are quoted, and in some mortgage ads, all you're seeing is an APR, which it's almost impossible to work backwards to and get to a fee structure to determine if it's a better deal or not than someone else you're comparing it to. So some things you might see when we show clients options, we like to show them different rate and cost options on any loan program that allows for that, of course. So there may be some radio ads on TV that you may hear where the lenders are talking about a no closing cost loan. That means there's no fees at all being charged. That's what it should mean. In some advertising, what that really means, especially on refinance advertising, is that they're just taking all the fees and rolling them into the new loan, which means you're not bringing any money to closing. But on a purchase transaction, what a new no closing cost loan really means is that you are okay with a slightly higher than average interest rate, maybe an 8.25% higher, depending on the size of the loan. And for that, the bank is actually going to give you a credit and pay for the hard costs of doing the loan, any lender fees, maybe appraisal fees or title company fees. That's a really good structure if you're going to keep the loan just a few years. The way we start off on our loan programs, what we call a market interest rate, is a loan where you're not paying any 1% origination fees or any discount points. Both origination fees and discount points are fees that are charged up front by the lender, which are used to buy down the interest rate or reduce the interest rate. So you're going to have some lenders that quote no closing costs, but what they're not telling you is that you're actually getting a higher than average interest rate. There are other mortgage ads that you may see that talk about how low the interest rate is, but it may include a couple of discount points. If you read the fine print, and a discount point, 1 point on a $400,000 loan is $4,000. So a couple of points is like $8,000 on top of the normal closing cost. So again, that can make sense for some people if you know for sure you're not leaving that home and you're going to be there for a really long time. So we like to compare lots of options side by side, everything from buying down the interest rate with some points to a no point market rate structure up to maybe a no closing cost structure, if that makes sense for the client. Let me know if you have any questions, and I'd be glad to help and walk through the numbers specifically with you. Have a great rest of your day. Bye-bye.